started now?
All right, so to lead off, let's talk a little bit about Zoom and the forum registration. So we have a few housekeeping items from ABC to share. So everyone knows, once you register for one of these sessions, then you will be registered every week from here on out, unless you let Janessa know that you want to be removed from that list.
So this is like a really bad mailing list that you get to be a part of. So
it's not a bad mailing list, it's a good mailing list you get to be a part of.
There's an opt-out situation. So if you don't want to be a part of it, you don't want any more of the correspondence, just email Janessa and then she'll pull you off.
But the good news is, if you want to keep coming to these, you don't have to keep registering. Once you're in, you're in. So we will, at every so often when we get a little noisy, we will mute all the mics. If you are muted, that doesn't mean we muted you because we don't want to hear from you. So by all means, you can unmute yourself at any point that you want to talk. And a good piece of advice we got is that once you have focused the screen and have hit the mute and unmute with your mouse, you can use your space bar to mute and unmute more easily.
Another helpful piece is it is helpful to other folks if you share your video. So it's not a requirement for anybody. If you're uncomfortable or wearing pajamas or feeling a little scrubby, that's okay. But part of why we come here is having the ability to see other humans in real life besides just our spouses and our kids. So totally up to you. But we recommend you do that.
It's very appreciated if you allow video. And you can do that if you take your mouse and hover over your Zoom interface over the screen where you're seeing us talk. Then you should see a little bar come up at the bottom, and that is your Zoom control bar. At the left, you can see your mic where you can mute and unmute yourself. And there's a little arrow next to it so that you can pick a different microphone if you need to. You can set which device your computer is using. And then same thing with the camera. You can pick which camera. You can turn your camera sharing your video on or off.
So another ask we have for everybody is, when you log in, if you could be so kind as to share your full name so that everybody on the call knows who they're talking to and who we're interfacing with, and so we know we're not dealing with robots.
And I believe even if you're already logged in, you can change that. Let me look. Yes. So one thing we're about to tell you anyway is, when you have that Zoom bar at the bottom, if you want to see everyone who's in the call right now, or also if you want to be able to use the yes and no buttons, which we're going to tell you about in just a minute, you want to click participants on your bar at the bottom. And that will pop up a little window that'll show you all the people who are in the call right now. So if you need to change your name, if you have a shortened name or a nickname, you can hover over your own name in that list of participants, and you'll see a blue More button. Click on the More button, click on Rename, and that will enable you to put your full name in so everyone knows who's talking.
Okay, so then the next test that we're going to run through is using the yes-no function. So it's really helpful when you get a room this big to be able to quickly get a read from everybody in the room. In the participant function, in the participant window, there's a yes and a no button. So if I could get everybody to click the yes button, that'll tell us roughly how many people are on board with that.
And you always get a smart aleck who says no.
Usually have one smart aleck in the group at least.
If anybody's having trouble finding that or seeing that, please let us know. You can just speak up.
22, 23, go faster. I hear you.
So also there is a couple other handy buttons in that interface. You've got a More button. There is a coffee cup, which you can click if you think it's time for a break, although we don't take breaks in this session. But you can click it to let us know you have gone to get a cup of coffee or take a break. There's also an away, and you can click that one too.
And one more piece we'll touch on that is kind of a piece of news, piece of housekeeping, is that like with all other things technology, as technology advances, you have to be worried about security. So one thing that we're seeing a lot of in the world is when folks are using Zoom, you'll have internet trolls who just enter in random Zoom numbers and will drop in and share their
their screen and share offensive things. Let's just put it there.
Yeah, that's well put.
So the best practice, so this meeting is already handled because Janessa is a Zoom expert and she's got us all set up. But if you're using Zoom for meetings with your team, something to be aware of is it's helpful if you use that meeting room, the waiting room ability so that you can let people in when you know who they are. And there is that option that you have to use a meeting password. It often seems like we don't need to worry about that, but that can be a great way to keep that from happening to your meetings, because there are a lot of people right now, a lot of teenage kids and
with not much to do.
People just sitting around at home, being bored, looking to disrupt your Zoom meetings.
Here's looking at you, Jason, with your bear and your photo, 3D bear. Yeah, we saw that. So a brief state of affairs with respect to news. We want to talk a little bit about this. More information about the PPP came out.
Yeah. So generally what we're seeing at this point between the last session and now is the news is finally starting to slow down a little bit in terms of all the new pieces of information coming out. So what we're seeing now is all of the things we already knew about are just starting to fill out, where they're getting more information about it. And now kind of all the little questions that were unanswered before are starting to be answered.
It's starting to solidify.
So in the bigger picture, if there's some piece of that you were kind of waiting to see, like, am I eligible for this loan, or what's going to happen next? How do I apply? All those little pieces, we'll address what we can, but ultimately go look again if you were looking at that stuff last week, because all of those websites have been updated, especially the federal ones. They're updating all the time, and we're seeing lots of new little pieces of information come out.
And we're starting to see actual application documentation come out. And another piece of news that is relevant is Washington State has released a website for reporting people who are violating the stay home, stay safe order.
And there are just a handful of industries in that little drop down, and construction is one of them. So if you have an essential project, just make sure that you have your stuff together and that you are able to back that up, because that is something that we're going to be, I think, seeing more of, is, again, people who don't have anything else to do other than go and report things that they think are not right.
Right. So the topic of today that we're going to be going into is cash flow and keeping your doors open. This is a particularly difficult time, as if I know some folks were having struggles anyway with normal cash flow management. And this is kind of a curveball that no one was really expecting to see quite so severely, that's for sure. So we have a handful of industry experts that we're going to be pulling in. If we could just get some brief introductions here. I know that we have Andrew Cates from Moss Adams, and I know that he has an early stopping point today, so I know that we're going to be going to him first. Andrew, where are you at? You could just say a couple of words. Andrew? Hold on here.
Yeah, in a spotlight.
Keep going.
There we go.
There we go.
All right,
there we go. Hello, everybody.
Here we go. Okay. Love it. And then next we have Terry Polyak. Terry,
hello.
Where are you at, Terry?
Up over there.
There you go.
There we
Terry.
go.
Hi, everybody.
So we have Terry Polyak from Insperity here to help out. And then again, we have Jason Jocson. We need to find Jason. There we go.
Yes.
You could just.
Hi,
there he
everybody.
is.
Hi, Jason.
So Jason is from BBSI. Jason, do you have a LinkedIn profile? I wasn't able to find it.
So my full name is actually John Jason. So
there it is.
Okay, got it. Okay,
So we
so
know the secret.
we're going to be talking about a couple of cash flow best practices. Did we have any other panelists that I missed? I know that we had a couple on the docket, and I'm not sure if anybody else made it, but 3 is plenty.
Yeah, I think we're good.
Okay, so I wanted to talk about a couple of best practice contractor level cash flow management strategies. And the first thing to think about is that cash flow is separate, completely separate from profit, right? A profitable job is not the same thing as a job with a good sense of cash flow. So as we go through and we're talking about a couple of these pieces, the question is, what is more important to you at this moment, cash flow or profit? Because in many situations, you have the choice to trade one for the other. Cash flow has the ability to keep you alive for today, and profit is what keeps you going in the longer term, right? So there are really 2 different pieces to talk about. Accounts payable, basically where you're spending money, and accounts receivable, where you're receiving money. So it's important that you have your finger on both of those elements, because it's definitely a balanced situation. Oftentimes the biggest place where we have AP, accounts payable expenditure, is payroll. right? By let's say by a show of yes or no, how many people are concerned about payroll?
Use your yes or no buttons
Yes
over
or
in
no
that
buttons.
participants window.
Yeah.
Yeah, pretty much everybody. Well, a couple who aren't. That's
Yeah,
good.
That's good. Okay, so one of because this challenge is different, I really encourage business owners and leaders to think a little bit differently about accounts payable and payroll. Every person who works with you and works for you has a different financial situation, and everybody has different bills. Some people own their home, some people own their car, some people don't. Every person on your staff has a different financial need. And so at this point in time, it's really important that you reach out to them and you understand what is their acute need. I know that there are laws that speak to this thing, and I know that some of the folks, the panelists that we have on today, will have opinions that may differ from mine, but I do tend to take a very practical, plain-spoken approach, and I feel like this is just the number one issue is taking care of our people and making sure that everybody is whole and eating. So talk to your people, find out who needs what, when, and try to figure out how are you able to skinny down accounts payable payroll, even if you're keeping tally of it and it's a good faith loan and all that good stuff, and HR can help you sort that stuff out. But in the short term, make sure that your people are fed and they have what they need. The other big piece related to AP has to do with subcontractors and suppliers. And I would reach out to those folks specifically, especially with your big accounts, and have conversations with them just to let them know where you are. If you need some deferral of those payments or some extensions, don't be too proud to ask for it. Ask what you can do for me. Can you help out? Is there some way that we could put this off by 30, 60, 90 days? And you would be shocked at how many people, if they have the ability to, would negotiate, would be willing to work with you. So don't be too proud to do that. And then when we're talking about AR, the first step is
Accounts receivable.
AR, accounts receivable. The first step is to verify the status of all of your AR payments or your outstanding receipts. So where are all of your payments at? And specifically for anything over 30 days, I would be aggressive in contacting those large accounts. And again, having specific conversations about it, asking them, we are in a vulnerable position here, like everyone is, but we particularly would really appreciate it if you would help out and pay it down, make whatever payment you can, even if they're issuing partial payments. That will help. If you owe me $100,000, I will take $50,000 if you give it to me today, and then we can defer the rest. Right, we're trying to get as much cash in our hands as we can at this point in time.
And being aware that there's going to be a wide array of different situations in those people that we're talking to. Some of them are going to be happy to help, and some of them are going to be not able to pay, just like we might not. Yeah,
it's the same thing, but it's the conversation, and it's that personal connection that makes all the difference.
Don't hesitate to have the conversation, and don't feel like you need to put forward a super professional front right now, because times are different. This is different than what we're used to, and everything is a little bit unusual right now.
And Carrie Cordes, I'll call you out. You're wearing your baseball cap. If you're looking for money from folks, put your baseball cap on, right? And reach out to them and say, look, I'm just Carrie, and we're trying to keep our business running. What can we do to break some payments loose? Another piece that comes into play are early payment discounts, or basically payment discounts. If you have accounts that you're concerned about, you have reason to believe that they're going to go under, or you're worried about their business or how long they're going to survive, go ahead and offer a payment discount if that means that there's a better chance you'll actually get paid on that account. That is a huge issue. And if they go out of business and you took a 10% pay cut to get your money before they went out of business, that is an excellent deal. So just be aware of that. And then the last piece before we turn it over to our panel of experts, when we're talking about projects and work specifically, a couple of best practices here are, don't be afraid to bill aggressively. So when you're putting out your progress payments, don't be afraid to be aggressive with the numbers that you're using. And accountants, close your ears. You didn't hear this. But be aggressive with the numbers that you're putting out. Be optimistic with the amount of work that you think you can accomplish. Err on the side of collecting too much money, because cash in your pocket today could be what allows you to live to see tomorrow. And then when we're talking about pre-construction billing or Division 1 billing, Division 1 is specifically your management, your engineering, your drafting, any of your setup or office setup pieces. Many people don't bill for this, although you are entitled to bill for this in most cases, where you can bill for the time that you're spending. So make sure that you're billing for your management time, your pre-construction time, bill for your submittals that you're putting together, your shop drawings. All of those components are work that you're doing, and you're entitled to get paid for that work. So make sure that you're billing for that stuff. And then stored material is another big piece. If you have material that you've already procured that's kind of frozen, or if you're going through the process of procuring the material in anticipation for this to be lifted, then go ahead and do the extra work to get paid for that stored material so you don't have to carry it during this period. And another piece, the last piece before we go to our panels, is don't be too proud to ask for deposits or initial payments when you're starting new work, right? Put that out there. Say, we're in a risky situation right here. We're trying to make sure that our jobs are lined up to be successful. Don't be too proud to put that out there to say, we're requiring that all new projects make a 20% initial payment. Depending on your business type and business model, that's going to vary a little bit. But what all of those things will do will help increase the amount of cash that you have currently in your business. And then we can start to talk about all of the other accounting pieces, the tax pieces, the loan pieces that our panelists are going to be addressing here. So before we go to Andrew, I want to go to him first, because we are I know he's limited in time.
Yeah.
But other panelists, did you guys have anything to add or any thoughts to that you'd like to share before we move on? Andrew, anything?
Actually, those are great points. I think we're seeing that in all of our industries, not just construction. So it's candid conversations about, upfront payments on work already happening, and being smart about your AR, and businesses are getting in trouble to get in front of them and negotiate. So I'll agree with all those.
Great.
Excellent.
Jason, Jocson, did you have anything to add? Any thoughts there? Did I do okay?
No, I echo the same sentiments as Andrew, because we also have ARs, right? So we've reached out to some of our clients that, hey, in this unforeseen times, because everybody's stretched and their business is drying up as well. So we understand that. So it's better to communicate than not to communicate. And then there was a comment earlier about compensation, right? If you are going to make changes to compensation and you interview your employees and where they're at, make sure you communicate up the front, because I do have clients that we just turned the new year. They were going to do the performance and compensation reviews in Q1, and which is their typical practice. But now that's out the window, because you can stop that if it's the normal protocol, but you need to communicate to your staff, right? And do it equitably as much as possible.
Yep. Absolutely. Let them know what's going on.
So Terry, did you have anything to add to?
I do. Thank you very much, and great job. I think it's very interesting that in the future, I think we're going to all learn from the lessons today that this probably is the best way to do business, which is lay it out, be honest, negotiate in good faith up front, and ask what your payment terms will be. And, if you have your professionalism of expertise of giving an estimate up front, there is a value to that. Your time is worth something. And it's probably a great idea to actually see if the market will bear you charging. Now, what typically happens is, oh, well, Joe over here isn't going to charge me for that.
So charge you for what?
For an estimate, for example, or a projection on a project. But to me, in everything that we do, there's two things. You got two hands, right? One says price, one says value. If the value one comes out in front, that makes the most sense for everybody, because people don't like when they hear, oh, it's going to cost me this. But they are used to hearing that I'm used to making an investment. And that's what we're dealing with in everything that you folks do, is people are investing in their home or in creating a business or a project. And so if you can get that understanding of it's an investment, not a cost, is absolutely true. It's just a matter of getting your head around it correctly.
Yeah, absolutely.
And the other thing is, in the way Insperity does our business in our workforce optimization solution, we actually accrue a debt during the pay periods. So, for example, if you're on a semi-monthly pay period from the 1st to the 15th and 16th to the end of the month, we don't charge you anything up front, not for healthcare, not for workers' comp, not for anything. We just accrue the debt, and then on the 15th, we verify payroll with everybody, and then everybody gets paid, and then we pull the money out of the deposit account and won't see the money for another 2 days, the way the banking system works. So it's a real benefit to small business to work in that way, because obviously, who gives you cash flow benefit? So it's just another way that we do have a unique way to do our business that we started 34 years ago. So,
Andrew, so do you have any update based on the new information that we have access to that you'd like to share, whether it's about the PPP or idle loan or anything that you could provide support with?
Yes, as a matter of fact. And before I jump into that, I just wanted to, your comment earlier about helping employees out, making sure they have, money in their hands and everything. I wanted to point out there's a code section 139, and I mentioned it last time, and it's a disaster.
Code?
So 139.
Is it IRS?
Internal Revenue Code, and it's for disaster relief payments, and it's commonly thought of during hurricanes and floods and that kind of thing. But and there was confusion about, does a state disaster declaration mean I am in, but a state didn't mean I'm not. I think everybody's pretty well settled that this entire nation is under a disaster order. And so really it comes down to helping employees with payments that aren't compensation. It's for expenses that were caused by this. And I think there's a Bloomberg article out there that's got a good list, but it's unreimbursed medical, it's, increased expenses for being quarantined at home, setting up a home office. There's increased, costs for childcare. There's a lot of things created by this. And as an employer, you can help alleviate some of that. And those payments aren't taxable to your employees.
Right.
So they can't be replacement of wages, but you can certainly make that move. And as long as the employer needs to have, good documentation around why they're doing that, and that those are really offsetting costs that are happening because of that, I think it's just a great way for employers to do that if they have the resources.
And so is
Absolutely.
there a specific resource that folks could look at to get a common language understanding of what that means?
It's probably best to go back. The IRS ruled on this back in 2003 when the September 11th happened, actually. And so the Terrorist Act came out, and employers were helping. And so they ruled 2003-12 is the ruling.
Got it.
And if people want to go look at that, think about what that means. But it's there's no dollar limits. There's not regulations on this. It's really a factual situation. And so our firm is just taking it situation by situation. A lot of companies aren't in a position to be doing that. Other ones are. And so it's just very situational.
Got it.
But it's something that, kind of ties into your earlier comments.
And if you're remembering that later and you're trying to remember what it was that Andrew was talking about, on our COVID-19 resources page, we've got a link to some more information about section 139 after
Perfect.
Andrew told us about it last week.
Yeah, apparently it's on our website.
Yeah.
Great.
I didn't know that.
That's me managing it. So on our website, when you look at our COVID-19 resources page, there's a section that says something like, what does it say? It says, how do I navigate tax code related to these new laws? And inside of that section, you'll find some stuff about a handful of different kind of tax codes that might apply to you.
Who knew?
Nice.
I didn't know about that.
I showed it to you when I put it up.
We're all learning something new here.
It's all moving pretty fast.
It's true.
Got it.
So, yeah, let me share a screen here if I could.
Please do.
And then we can talk through a couple of things that I think are things we brought up last week, and there's been developments. So I put together a few slides so that I could remember what they are. There's really two separate provisions under the Family First Act that passed on the 18th, and that is the Sick Leave Act and the Family Leave Act, and the benefits extending under those.
Mm-hmm.
And the big takeaway here is that there's a full credit, refundable credit for any amount that you're expending under those two provisions.
Mm-hmm.
And so the mechanisms to get those, I think there was some confusion around that.
Mm-hmm.
Mm-hmm.
And since then, there's been some clarification. So the way that you get it, the IRS released, some FAQ,
Mm-hmm.
and it's really helpful. And so, these slides actually have links. So I'll send these to you guys, and you can use those links. But it's the IRS FAQ, and you use 941, the payroll report, to claim credits. And they realize that you're not going to be doing that until July, because the period April 1st through June 30 is the first measurement period, and you wouldn't be filing for credits and refunds until like July. And so instead, they came up with this form 7200, and they released that, I think, the day before yesterday.
Mm-hmm.
And that form right there is how you can file for an advance payment of those credits that you're going to claim on the 941s.
Right.
So you can see how they're trying to react to these, urgent situations. And so I think that was a, great clarification. They rushed that form out. There'll probably be questions around what's in that form.
Mm-hmm.
But anyway, I thought that's been an update since we last talked.
So I think the short of what it is that you're saying is that the IRS has provision for taking impromptu action when it comes to making sure employees are taken care of. And so there's a little bit of cover there. So even if you're making payments or deferring payments that could typically be regarded as an HR nightmare, I think that there's a little more cover provided here. Is that fair? That is, and they say that in their FAQs, that there's a no enforcement type behavior that's going to be going on as people kind of struggle through this. Mm-hmm.
And then I would point out the second bullet from the bottom here, the CARES Act that was passed. That one's got an employment tax deferral mechanism, so that when you go through this waterfall of, okay, here's my normal situation, I had to pay these extra leaves, so I've got these credits I'm going to take.
Mm-hmm.
Then I've got an obligation of otherwise having to make deposits.
Yeah.
Well, now the new act says, no, don't bother making those deposits.
Mm-hmm. Right.
So once you're through all the credits and you still owe something, don't give it to them.
Right.
So I think
and so it's important that we're keeping the focus on cash and liquidity, if at all possible here.
Yep.
And I think the piece with the IRS code, that is helpful to know that we have a little bit of space there. But I think that should definitely be the focus.
Yeah, and if you forward those links and your slides along, then people can find them on the ABC Resources site. There's a table there where people can see it.
And also, if anybody else is participating and you want to keep any of this information, just hit Control Print Screen and paste it somewhere. And you could always go back to it later and look at it.
Yep. All right, carry on, Andrew.
Great. So that's kind of the updates on the Family first act
Mhm.
that was passed.
Got
This provision under the new Stimulus Act, the CARES Act,
Mhm.
this is the other one that's getting a lot of discussion right now about the Paycheck Protection Program.
Yep.
And literally by the hour and minute, the SBA has been putting out updates on this.
Mhm.
And so what this is there's normal SBA type activity, and then there's companies that don't qualify for that because of, and what I ran into yesterday was construction companies that were going on to websites and trying to put in SBA information and getting back the message, you don't qualify. And it was because of the dollar limits, the revenue income limits.
Mhm.
And that's normally part of what they talk about with a small business concern,
Mhm.
what they did though is this law expanded it beyond that small business concern and basically used only employees for the threshold to figure out who qualifies.
Mhm.
And the SBA is clarifying all that on their site. So I think it was a great comment earlier about make sure just to go to the source on these. Go to the Department of Labor, go to the SBA, go to their website, because
Mhm.
they're constantly updating it. And as soon as I get done talking about this, I'll go back and look, and they'll have updated something else.
Yep. Absolutely.
Right?
Yeah.
That's what we're running into.
But it opens the door.
Mhm.
And I think you mentioned earlier, they've actually got an application that people can fill out, at least starting to organize their information, because
Yeah.
those are then able to be submitted tomorrow.
Mhm.
Yes.
So
Right.
Tomorrow for small businesses and sole proprietorships, people basically with employees.
Mhm.
And then
Right.
it's, what is it, the 10th for independent contractors and self-employed individuals? Is that right?
that sounds right. Don't hold me to it. They've
Yep.
got those dates out there. So,
Yeah.
Yeah, I
But-
believe that's right.
but this is all happening real time.
Mhm.
Mhm.
And the loan period is February 15th. So looking back through June 30. And
What
so
do you mean
there's,
the loan period is February 15th?
yes, what they determined to be a covered loan.
Mhm.
And the reason why they did that backwards is that people just applied for different loans.
Mhm.
Mhm.
And I understand there's a provision that allows you to convert those to these covered loans under this
Mhm.
provision.
Mhm.
And the reason that's important is that the old loans, you had to pay back.
Mhm.
And under this one, if they're under this provision, you may not have to.
So what this means is if on the day that King County said, hey, King County is a disaster area, you're now eligible for EIDL loans, the SBA EIDL loans, which are different than these loans.
Mhm.
If you applied then and now you're actually moving through and they're about to give you your money, you can convert that to a PPP loan instead. That's correct, right, Andrew?
Yeah, I think that's right. And again, all those kinds of answers and actions, I mean, what companies need to do is reach out to either the SBA lender that they were engaged with, or there's a lot of new lenders,
Mhm.
local lenders that are being qualified to provide these loans.
Mhm.
Yep.
And so our advice is to get with your lender, have
Well-
them answer those questions for you so
Mhm.
that you're sure what you're,
Mhm.
Yeah.
doing.
That's the direction that we've kind of been giving people, is especially now that this application form is out, you take that, fill it out, make sure you have everything you need, and then go talk to the bank that you have a relationship with.
Mhm.
And that's going to be the best place to start.
So I always tend to be skeptical of everything. It's just kind of the Midwest attitude, right? When something sounds like it's too good to be true, it usually is. This is a weird situation to be in, and everything kind of flies in the face of common sense awareness. So is there any risk, and other folks can jump in too here, our other panelists, is there any risk of kind of fly-by-night folks taking advantage of people putting applications out there for lenders? Is there any opportunity for abuse there, or anything they should do to protect against that?
And if I can quickly, because
Mhm.
I actually just read something about this today, and they
Mhm.
were saying that there will be a lot of lenders who basically are not necessarily qualified, but they're going to come and want to take your application
Mhm.
to act as a middleman. So it's the best if you have a bank that you have a relationship with that was already an SBA approved lender, because
Mhm.
in the interest of getting this money to people as fast as they can, they've really opened up who can offer these loans.
Mhm.
And you want to make sure that you're getting someone who's a reputable contact, right? Any input from you
So,
guys?
yeah, Jason?
So in my area, I'm in Kent, near Kent, South Sound area.
Mhm.
So what I suggested to my clients is, if you have any questions on who is an approved lender, if you don't know, talk to your local chamber of commerce. And basically they will have a Rolodex for you. And also most credit unions are already SBA approved, and most major banks are as well, depending on which bank you're in.
Well, and we bank with Bank of America.
Right.
I'm willing to bet that they're
They are. I have a couple
Yeah.
of clients already applied. Right.
Yeah, it's the devil you know kind of thing.
Right.
So there were two people on that I didn't recognize. Is it?
Keitha and Sarah. So if the two of you can look at your chat window, and you'll have a chat from ABC, if you could just take a look at that and respond so we can make sure we know that you guys were here.
And then one more thing I wanted to point out before we move on to our next conversation. Let's see if I can do this here.
Trying to share.
Let's see. How about that?
We're still learning Zoom too.
Yeah, how about that? Yeah, we actually had our first 2 digital classes today, so it was pretty exciting this week, and they all went pretty well. So I just want to point out too that ABC does have a pretty robust information link, and so just if after the session, go ahead and take a look through it, and feel free to share with other folks that could have benefit from that. There's a lot of good info there.
Yep, absolutely. And so there's a lot of just good general information about everything. But if you look at the top of that page, you'll see a little table, and any resources that our experts share with us during this session, it'll be in that table next to this session so that you can get directly to it.
So there was a question, I think this was for Andrew. Can you apply both the PPP and the tax credits at the same time?
Great question. So the answer is they do interact. And what you want to do is be thoughtful about, because what happens is, let's say you apply for the PPP and you take these credits, and then, because you're using the money to actually spend on these wages and claim the credits, then the loan actually gets forgiven. Well, having the credits after not having the cash come out of your own pocket would be kind of double dipping. If they're going to forgive the loan, then you don't get the credit too. And right now I think they're writing the regulations around how that goes. But my understanding currently is if you've got the loan and you intend to spend the money on the people, go ahead and claim the credit, because it's not until it gets forgiven that you get denied the credit, and therefore now you have a tax due. But then it might fall under the act provision that says you don't actually have to pay it. You get to defer that. So there's this interplay that goes on. But I think the answer is you go get the loans that the business can get, and you use them to keep people. And if that means that you don't have to pay for that because they forgive the loan, I wouldn't be worrying about the credit.
Right, exactly. We can worry about that when we get there. So another thing that I think maybe Andrew might have some input on that we haven't really talked about here, that I've been hearing more people talk about, and I see in the chat, we have Carrie talking about the EIDL loan and the $10,000 link, is this new provision that is a $10,000 grant related to the EIDL loan. So basically when you apply for that EIDL loan, if you kind of make it through the first round.
So for the folks who don't know what an EIDL loan is, what is an EIDL loan?
The EIDL loan is the economic disaster. I don't know exactly. It's on our site.
Who knows the acronym?
What's it short for, guys?
Pop quiz.
Oh, good grief.
It's not just me.
This is not a good sign.
It's okay, hang on.
Disaster loan. There you go.
Economic injury disaster loan is what it is.
So this is if you're economically injured, right? You've taken some financial damage.
So this is the one that's available to people who are in a disaster area, which is now everyone in Washington. And it's the one that is a normal SBA loan that you actually have to pay that loan back. And it's got all of those normal criteria, like you have to prove you tried to borrow somewhere else. You have to have personal guarantee, you have to have collateral.
But I think that the magic of this one, though, that's different is that within 3 days, you're supposed to be able to get access to 10 grand if you need it. which from a cash flow standpoint, that can be really beneficial.
And then if you spend it on the stuff that you are supposed to spend it on, basically, then you don't have to pay the 10 grand back. And if they approve you and give you the 10 grand, and then they decide in kind of the later steps of underwriting that you don't qualify, then as I understand it, you still don't have to pay that 10 grand back. It's just a grant.
Is that right? That
So
sounds bonkers.
what can you
to me.
tell us about that, Andrew?
Now you're getting into employment SBA stuff that I'm a federal tax guy.
Okay, fair,
So
fair.
I can't say for sure, but what I do is that those are questions that are being answered right now on that SBA site.
Mm-hmm.
So I would definitely go check out the FAQs. It wouldn't surprise me if the answers are already there.
Yep, absolutely. And again, I'm sure on ABC's site you can find information about this, but also on our resource site, when you look at how do I apply for the loans that are available to help me, I've got a link to an article there about that $10,000 grant that talks all about exactly how it works and what it is.
So Andrew, is there anything else that you would want to make sure you share with folks? I know that you have a 2 o'clock.
Yeah, no, I appreciate that. And I did have one more. I'll just put this up on the screen. And like I said, I'll be sharing these so that you guys have them. The loan forgiveness provision is really just spend the money on, like what you said, spend the money on what you should be spending it on. And there's a good chance it gets forgiven.
Yep.
This is something outside of the act. At least a couple of these are that I wanted to make sure everybody thought about. The first one is a quick refund of any tax deposits, income tax deposits that you made as a corporation. Don't wait. This has to be filed by April 15th. And if your estimated tax deposits are going to be greater than what you think you're going to owe, which is what we're hearing in a lot of instances, go get them now. And that form is a 1-pager, and you just say, give me my money back, and get that in with the IRS. So that's something you can do quickly. And they have to process them, so it's not something you're going to get in a matter of days, but you know what you're going to get, and it's on the way. The other ones are part of the stimulus package, and I wanted to point them out. That employer retention credit, the 50% credit. So that kind of operates like the sick leave and the family leave credit. When you get through those, and if you still owe money, then this credit will go against those to reduce that number on a permanent basis. And then, which is also refundable. And then finally, you get to the point where you can defer the payroll taxes. That's the third point. So these are all, either immediate benefits or in the not too distant future. The last two are really, they take a little bit longer, and so it's probably lower on the priority, but these are the carryback options. And in fact, I shouldn't say that about 18. Everyone's filed their 2018 taxes. And for some reason, if there's a loss there, you can take that and carry it back right now and get that claim filed. Now, there's things to think about when you're doing that, because there's interactions with other tax attributes and everything. So that's really an exercise for you to work with your CPA and figure out what's the right answer. But the major observation here is that taxes being paid back in 18 were at higher corporate rates. So you're going to take a deduction or a loss this year, and if you carry it forward, it'll offset lower 21% taxes. If you carry it back, it's 34, 35, depending on your situation. So that's one to know about. After you've gotten through this first crush of how do we get money in the door. And then the AMT credit refund, that was coming anyway, but they shortened it. That's the alternative minimum tax. That's a tax that corporations had to pay, and if they didn't have a regular tax. A lot of companies were still sitting on those credits. The IRS is just saying, okay, claim them and get them back right now.
Got it. Well,
and with Section 2301 and 2302 of the CARES Act, we also have some information about those on our resources page.
Great.
Anything else on the screen? Good to go?
No, sir.
Okay. So one thing I want to kind of reiterate at this point is that many folks who got into the contracting business, and that's the majority of the folks on this call, didn't get into business so that they could process this type of information. This is kind of the last thing that anybody wants to be thinking about right now in the contracting world. So it just makes my head hurt even talking about it. And I think that the number one priority for me would be trying to get as much cash in my pocket as I possibly can. And the second step that I would take would be talking to my tax professional, talking to my CPA, talking to my financial advisor who can help me break all of those other dollars free, because the complexity is such that I guarantee you will miss out on something that's happening right now. And I'd be willing to bet that even if you drop 10 grand on a CPA to help you through this process, you're likely, I mean, I think you'd be hard pressed to not be in a good position there, because
It'd be worth your while.
I guarantee you if I did it on my own steam, I'm going to miss out way more than 10 grand.
Yeah. So the way that we're trying to interact with this with our clients is basically just get your arms around the bigger picture. What are the pieces of this that I think might be good for me? And then you can go and sit down with your CPA or sit down with,
or virtually.
Yeah, not
virtually.
Virtually. You can sit down with those experts and say, okay, so I heard something about this $10,000 grant. Does this help me? Or I heard something about this 2302. What does that mean? And that way, instead of you just sitting down and going, I don't know, what is there? You can kind of say, these are the pieces that seem like they might fit my situation and get more directly to what you're trying to get to.
So Terry, did you have anything to add to that conversation?
Terry muted?
Sorry, had
There
to
we go.
get my unmute button.
You're good.
No, on this, actually on Andrew, I had a question. So my understanding, and I am not an expert on this, but that's why you're here. You can apply for one or the other, so the PPL or the tax deferment, but you can't apply for both. Is that correct or incorrect?
I think that's right. I think you lose the one.
Lose the
It depends.
So,
It depends on what's the best for you. So yes, I think you're right.
Yeah, because to me, it's like if one is going to turn into a grant, why would you just want to defer taxes? Because it's still something you owe.
You bet.
So Andrew, could you restate your answer using a full statement there?
The grant, the paid production loan that you can get, or the
PPP.
Yes, the PPP, the Paycheck Protection loan that you can get. If you can convert that to a permanent benefit, then you absolutely want to do that. And if you're going to do that, you have to make deposits for what you might otherwise owe.
Yeah, so what we're talking about here is that the other section of the CARES Act that says you can defer your payroll taxes if you're stuck and you need money, and you can defer those payroll taxes until later. So if you're getting that PPP loan and they give you money that they're going to forgive because you paid your people with it, then you can't take that loan and also defer your payroll taxes. It's kind of one or the other.
Got it. Okay, great.
Correct.
So Andrew,
Thanks,
anything
Terry.
else before we let you go? I mean, you're welcome to stay on, but I want to make sure we don't miss anything.
No, I think I've got a client that's anxious to hear about this very thing. So I appreciate it.
Thank
I
you
appreciate
very much.
everybody's time.
Great.
Yeah, we appreciate having you, Andrew. Thanks.
Take care.
Yeah.
So Terry, I want to go to you, and I know that you have a cash flow tool that you have for us that you want to share.
Yeah, and it's super cool, and it's already on ABC's website. You can get to it there if you want to download it and look at it as Terry walks us through it. So go ahead and take the stage, Terry.
Okay, so how do I share my screen?
So down at the bottom, you should have a share screen. It's like a little green box with an arrow.
There it is. Okay, good. Let me get it appropriate here so I can do this.
Once you click on that, it'll give you a little screen that shows all the different programs open, and you pick which one.
Let me get it ready to go.
No problem.
So what it is that we're going to be looking at is Terry has a worksheet, an Excel worksheet put together that's available for folks to use that will help you to calculate your expected expenses and essentially your accounts payable and your accounts receivable, so that week by week you can kind of have a snapshot of where you think you'll be. And if you have a more sophisticated tool that you can use, that's fantastic, but this is intended to help folks who need help right now.
Okay. So
Yeah.
I am going to share my screen in a second here. So if I get to the right spot, there we go. And I am going to share screen 2. Okay. In theory, you should be able to see that.
Not yet, but it should come up anytime here. Maybe not.
Oh, wait, hold on. One more button.
Here we
There
go.
we go.
All right, now we have it.
Okay, cool. So, so it is on the ABC website, and I will make sure I send everything I show today also, so that you just have it. But Growth Force is a strategic affiliate partner of Insperity, and just so a lot of you probably have no clue who Insperity is. We're a 34-year-old human resources outsourcing company. This company started in 1986 as an HR company. So we're not a payroll company that became an HR company. We're an HR company from the beginning. So, and we created the PEO industry, the Professional Employer Organization industry.
Mm-hmm.
It has been very successful. It's a nationwide company. This company started just like everybody else, with a couple people and an idea. And a service or a product, whatever, however you started your company. But our solution and our business model has been so successful, we're now a $5.25 billion New York Stock Exchange traded company. And basically our own best case study in that we got this successful by doing the exact same things for ourselves that we do for our clients. So it's everything from payroll and benefits, compliance, regulations, all the things you didn't get into business to do, we do. We're a human resources outsourcing company, and it's very unique. And if you want to find out more about it, great. I'm not using this as the way to sell you anything. At this point, we're here to offer resources, and there's a few that I'm going to offer you today.
So I'm worried about my cash, Terry. How can you help?
Yes. So in this case, Growth Force is a strategic alliance partner, and they normally, if you went to their website, it would say, fill out this form, put your name, your email address, your phone number, and then, of course, somebody would call you and ask about, do you want to talk about Growth Force? They're a strategic alliance partner, and I worked out with them that I can just give this to you. So you don't have to fill anything out. It's already on the website for ABC. And you can download it. Nobody's going to call you. If you do want someone to call you, just call me and I'll connect you.
Well,
But
somebody might want a phone call right now. I mean,
Yeah.
just talking to somebody
Just to
is a good
talk
deal.
to somebody.
It's
Yeah.
true.
But this is a managerial accounting firm if you use QuickBooks. So they only deal with companies that use QuickBooks. But it's managerial accounting is really going to help you decide what your money is going to be used for correctly. And this particular project or tool will help you and create a 13-week sources and use of cash flow. And there's a video here that will also show you how to do it. And so you don't have to do anything yourself. It's going to show you how to work through it. Okay? Does that sound all right?
Got it.
That's good.
All right. Now I'm going to show you one other thing. I'll drag it up. So Insperity, the way we do things, again, is so that you as an employer can focus on growing your business rather than do all those things that you didn't get into business to do. And I'm going to share, and I'll give it to Wendy to put up on the website. But it's a PowerPoint, I should say a webinar, which is really going to walk you through everything and has the application and everything else. But if you want to look through it, I think it's very helpful as well. And I'll get that and put that up for you as well. And I'll send it over to Wendy.
Okay.
And then on an ongoing basis, there are blogs, all kinds of things on how to manage people. One of the things I will send to Wendy, normally our clients, and I'm going to open it up for everybody, is we have over 3,000 Skillsoft courses in our learning portal. And there are great things in there. For example, you may need some cross training at this point with your workforce. And so there's a lot of tips in there. The 3,000 courses are everything from, how to do managing or sales or whatever, but there's also a lot of things on COVID-19, and it's right up front. So it's good for the month of April. It's a username and password, and it just will, vanish after April 30th. And then if you want it again, or if I can help in any way, just certainly let me know.
Got it.
Yeah, training is definitely good right now.
Yeah.
It's a good way to keep our people busy.
Okay. So, did you have anything else to contribute with respect to cash flow?
No, I am not an accountant, but that's I think the best thing that I can do is to share the tools that I have through Growth Force, and they can help you. If you need to speak to them, let me know, and I'll do the introduction for you, so somebody isn't just going to call you randomly.
Got it. Appreciate it. Jason, do you have anything else to contribute at this point regarding cash flow?
Not really, but I do want to expand on what you were saying earlier as far as all the options or levers as I look at them right now, the loans, right? One of the comments earlier that was made by Andrew, that section 139 that was mentioned, which is a great thing that I learned something today. Be mindful, and I think this is where people like Andrew comes into play, is when you pull that lever, right, and you pull the PPP lever, you got to be careful and be mindful if you're putting money in the section 139, that may not be applicable to the PPP, right? So, and as you were saying earlier, is you have to understand what levers to pull and what questions you might want to ask as it pertains to your business and how you're planning to use it. Because I know in our last session, somebody asked about overtime, right? And even right now, we're still trying to figure out what counts as payroll codes, right? We have some identification right now, but not everything is in there. Like bonuses, are those going to be applicable? I don't know yet for a fact. So as these things are still constantly evolving, that's why your financial person is very critical in this. So I don't recommend making a decision without conferring with a financial person. So
yeah, absolutely.
Got it.
So we have a question, another question about the PPP. So this question is from Zach at Exact Electric, and he says, don't you have to maintain the same number of employees June 30th as currently? And his bank actually said September 30th. If you get a loan and pay 8 weeks of payroll and things are still down at the end of that time, you would then have to maintain payroll out of pocket in order to get loan forgiveness, correct? Even if no billable work is happening due to COVID-19. I think that is correct. I think that if by June 30th, and I have not heard the September 30th date, but if by June 30th, you don't have the same number of employees and they aren't making the same amount that they were making, then you will have to pay some of that loan back rather than get it forgiven. And I know that another new piece of information that I just saw recently is the interest rate for paying that loan back. They had said no more than 4%, and now I'm hearing 0.5% is what they're actually rolling out with. So it is true that, and from my perspective, and correct me if I'm wrong, that you can lose some of that forgiveness if you can't maintain that all the way through. But also if you can't bring them back, then you just have to pay the loan back, which is not necessarily the end of the world.
Well, it's kind of a killer loan rate that most people don't have access to. We actually spoke with a client of ours who had higher payroll last year than they do this year. And they're actually looking to increase the size of their business and build out a division of their company right now, which is kind of a unique opportunity in some cases.
And Carrie Cordes makes a good point where she says, I would think they would extend the program in that situation. So if June 30th comes and we're still all down for the count, you would think that they would be responding to that and that you would see it extended. But it is true that
federal government.
Yes, but it is true that we don't have any guarantee that that's going to happen.
Yeah.
Anything to add to that, Jason?
No, I mean, I agree. I mean, there is a possibility. I think we probably heard that there's another legislation potentially coming, but that's still on hold because we haven't found out what the impact of the CARES Act is. And the FFCRA just went into effect 2 days yesterday. I'm
Yesterday.
I'm already losing track of the days, but it's just one of those things that it's a wait and see approach right now, I think. And but I concur with what Carrie has mentioned. Is from my experience, there is going to be potential changes. What those changes are, I don't know.
Right. Yep.
Yeah.
A lot of this is still changing every day.
Well, and the most shocking thing to me is the number of people that we talk to who have no idea what the CARES Act even is, no idea that it exists. And we're talking to our kids about it, and they said, "Really, Mom, Dad? Like people don't know about it?"
Because they're living with us, working at home, so they're hearing about it literally every day.
Right. I had one client who said, "I want to kiss you." You said virtually, of course, but
Virtually.
you know, but I mean, I didn't make it. But the question is always, how can we promote that information and share that information with other folks? And this forum is one way that we can help do that. So I really appreciate everybody contributing to it. So do we have
one other thing I wanted to just add to that conversation is that it's also true that when we talk about paying that interim cost of keeping those people, so we pay them for 8 weeks, the CARES Act does, the PPP does that for us. And then there's that concern that whatever we have left between the end of the 8 weeks and June 30th, that's on us. But I believe the way that the PPP works is as long as we bring the people back by June 30th. So if we can't keep them that time, if we have to furlough or have to let people go, and then we bring them back before the 30th when things hopefully pick back up again, then you're still going to be eligible for that forgiveness.
And I think the key there is that 70.
I see Jason nodding, so I'm good.
We'll just keep you around and just have you nod and everything. That'd be great, Jason. But
he's my hype man.
Yeah, that's right, hype man. But that 75% threshold, I think, is the important number to pay attention to with employees. So Jason, could you just reiterate what that means?
So basically, I mean, the 75% of your workforce, right, or the people in your company, that's the thing to maintain as far as the threshold in order for eligibility comes into play.
For forgiveness of the people.
For forgiveness, exactly.
Yeah.
Now, of course, after June 30th, and I don't know what happens, how this long goes, right? The whole rules of the game can totally change. But right now, as we know it, we're playing by that number. So abide by that number. Don't anticipate any changes until you hear something. But at the same time, as you were saying, is 75% of your workforce has to be in place in order for you to be eligible for the PPP loan forgiveness. Because the whole intent of the PPP is to kind of restore what we had before this whole thing happened. So cash flow from like whole economy keeps on going. That was the intent. So it's kind of counterintuitive that you pay your people, for just, if you have to, pay your people who are sitting at home for doing nothing. But that's the whole intent of it, right?
Well, and I think this is a really difficult thing for construction people to get their head around, in particular, because construction folks are all about the only way that you get a paycheck is through sweating and hard work. And
that's how it was in my day, and that's how I got here.
And this is very, very counterintuitive to the culture of construction. But essentially what's happening, and it makes sense why it's put together this way, is this is a gigantic pause button that the government is trying to put into place to say, we're just going to pay everybody to have a pause. We're all going to pause. We're all going to pretend like, wouldn't it be great if we could pretend like this time didn't happen? But we're just going to pause and pretend like this didn't happen, and we'll see you all in 2 months, and we're going to have to pay for this over the next decade
as a country
to recover the $2 trillion or whatever it is.
Right.
But I think that's a hard piece to get your head around from a business owner standpoint, and just from a working person standpoint, who is kind of salt of the earth type. So anything else that Terry or Jason you would contribute? I want to open up to questions if anybody else has any questions on
so I agree with Jason and everybody that has talked about this. But
which Jason? Which
both Jasons?
Both Jasons.
Jason squared.
There we go.
So the idea of this whole thing, in my understanding, is really to keep everybody employed.
Yes.
Now, quote unquote, air quotes, employed, right? So the idea is, yes, you're employed, no, you're not doing the work that you normally have been doing, but you're still employed.
Mm-hmm.
So I think it's going to be interesting for the companies that have already laid off people. Now the idea is, in order to get that grant, they actually have to bring them back,
Mhm.
right? So, which is happy news for everybody because all those families are suffering.
Mm-hmm.
And but I think it's a great experiment. You know, this is akin to a universal income, right?
Mm-hmm.
That's been tossed around. You know,
From Andrew Yang, right?
Yeah, Andrew Yang, right? And it's been done as an experiment in different countries, and actually in some state in the United States is actually done as well in this particular city. So, but at this point, we're in all our survival mode. We really don't know what's going to happen. You know, these dates are all arbitrary when it comes to, okay, you know, you're going to keep moving the goalpost down, because if you told everybody right now, you got to stay put till September, not very many people would be very easy about that, right?
Mhm.
So if it's kind of like, how do you eat an elephant, right? One bite at a time. So it's, okay, we're going to extend it for 2 weeks. 2 weeks goes by, and it's like, oh, we're going to extend it for another 2 weeks.
This
So
is like the Money Pit with
Yeah.
Shelley Long
2
and
weeks.
Tom
Yeah,
Tom
Hanks.
exactly.
Hanks.
Yeah.
Who
so
was
I
the
think
first celebrity?
I think we all have to get used to our new normal for now, but I think long term, everybody is going to be able to communicate better. Everybody's going to be taking care of each other better.
Mm-hmm.
It's kind of like God said, go to your room and think about it, you know?
Play games with your kids.
Yeah. That's it.
But I think a unique way to think about this challenge, though, is that employers have the ability to do something that employees don't. Employees have the ability to take out this PPP and improve the situation of their employees. Many business owners don't even know about the details of the PPP. And I guarantee you far fewer employees know about the PPP. So in this case, if you're the business owner and you play your cards right, you will look like a superhero.
Be a hero for figuring this out and figuring out how to keep everybody afloat.
Because they know even less than you do typically. And this is just a really great opportunity to make sure that our folks are taken care of. And it's an opportunity for them to know that we care about them.
Yeah. Well, you know, now more than ever, human capital or human capital management matters, right?
Mm-hmm.
So how companies manage their new remote workforce, you know, and keep the momentum going, the culture going,
Mm-hmm.
and everything that is involved with human capital management is a challenge. And so there's a constant need right now. I mean, the level of attention that HR has gotten is fantastic,
Mm-hmm.
because for so many years, people think of HR as, oh yeah, that gets handled by so-and-so.
It's somebody
Not
else.
it gets handled.
Yeah.
Well, yeah, absolutely, it gets handled one way or the other.
Mm-hmm.
But just like culture is either by default or by design.
Mm-hmm.
And companies that are most successful are going to do it by design, not by default, right? And if you have employees that know they're taken care of, well-trained, have a succession plan, know where they're going, guess what? They're going to give you discretionary time, which means you have higher productivity and lower turnover.
Yeah.
So that's the goal of every company. Whether they have the time or make the time in order to do that is where, you know, companies like Jason's, the other one, and mine come into play.
Yeah. So I want to open it up to the floor, the folks that we have here. Does anybody have any questions that you'd like to put to our panelists, or something that you're struggling with regarding cash flow specifically?
So
that's the focus.
Yeah, let's start with cash flow questions. And then if we get to the end of any of those and we have time left, then we can open the floor up to any questions. So cash flow specific questions.
I see someone used a no.
We got a no.
A no. Feel pretty good. That's a good deal.
Jason, I have a question.
Yeah, go for it.
This is Nigel Starr with HST Construction. I'm just curious if anyone's heard how long PPP, or how long it will take for PPP cash actually to hit bank accounts for use.
So I know when the day that the law passed, there was a webinar through the Department of Commerce.
Mhm.
And in that, the gentleman who was talking about the bill and talking about the law had said that he imagined that we could see money coming out as quickly as 3 weeks after the date of the application. There was still some uncertainty as to whether that was achievable or not, but I know that was the hope at that point in time. That was a week ago now, so 10 years ago in quarantine time. So anybody have any other thoughts on how quickly that money could get in our hands?
That was my understanding as well. So maybe around the 1st of May, something like that, we might be able to see the funds if we get our applications in right away.
So
Okay,
Jason,
thank you.
did you have input there?
Yeah, that's what I was hearing also from certain financial lenders that I work with, that I like Timberland Bank and the South End. So 2 to 3 weeks as far as that's concerned.
Yeah, good.
Yep, the trick is getting the application in and getting in the queue, right?
Yep. Also important that we get on these applications as quickly as possible, because basically there's a pool of money there, and once that pool of money is gone, then it's gone. So it's very much a first come, first served situation. So even though they say the deadline is June 30th, you have to apply by June 30th or else the window closes, that money may very well be gone long before June 30th. So get on it as soon as you can.
And aren't there 2 different application dates for PPP?
Yeah, we talked about that with Andrew. So it's let me pull it up and make sure I have the right numbers in front of me.
Jason or Terry, are you familiar with the 2 different application dates?
I believe the application opens April 3rd, tomorrow. And then the deadline is June 30th, as far as that's concerned. And any idle loans that you've already put into place, definitely speak to your, I don't know what they call them, like loan officer that you're working with, to repurpose that to a PPP if you are so inclined.
So go ahead and share the screen. So the other important date here is that for most of the people on this call, likely you will be part of that April 3rd group. If you are a small business, you're a sole proprietorship, either of those, then that April 3rd is when you can make that loan application. But for independent contractors and self-employed individuals, that's actually going to be April 10th. They're kind of holding those businesses up a little because they're not really paying. Those are the businesses that aren't really paying payroll. So they're saying if you want to apply for this, you can get some help too. But that is April 10th. So anyone who's kind of a carpenter who just does work for himself, someone, there you go, someone who just does work for themselves and doesn't really have a team, that's an independent contractor or a self-employed individual, you have to wait till April 10th to apply to kind of make a little extra room for those companies that really need it for the payroll.
And so Jason and Terry, if you could, when you get a second or a breath, contribute to these dates. We're just trying to put all of the dates together that are relevant to make sure that folks don't miss out on these things. That would be really appreciated. If there are critical dates that you're aware of that people need to keep their finger on.
That important things need to happen by.
Good. There we go. Okay, did we have other questions from all of the participants here? Anybody else? How about a sign of yes or no?
So we have a question here.
Is it? Okay.
Would PPP be applicable for underemployment payroll coverage? Example, employees are only working 20 hours a week and receive unemployment benefits for the balance. Could PPP cover that unemployment portion, therefore giving the employees better wages than ESD payments?
I thought this had to do with the 75% threshold. Is that right, Jason?
Right. What this scenario is virtually doing is double dipping. So the intent of the PPP is to restore your employees to what it was before.
To their full, to basically pay them 40 hours a week.
So what I anticipate, again, based on this scenario, if this is applied, you could, I don't know what the government's agencies will do. Based on the rules that I know them today, should not be combined together. PPP and ESD and all that stuff. So it's, again, 100% of their restoration of their wages, which takes away ESD into the equation, and that's it.
So then you wouldn't want them to file for unemployment or partial unemployment during that period. You would want to go full into the PPP or full into the unemployment.
Right.
So with the question, could PPP PPP cover that unemployment portion, therefore giving the employees better wages than ESD payments? The answer would be yes. You'd give that to them instead. You would give them their 40 hours as covered by the PPP and get ESD out of the picture.
Right.
Is it Donna? Do you want to interject here?
Right, that's what I was trying to get across. Can I drop the unemployment portion and pay my guys the 20 hours that I do manage to get them working, because we are an essential business on certain projects, and the rest could be covered with the PPE?
Well, so the PPP would be intended to cover the whole 40 hours.
Yeah, so you would pay them for 40 hours, and that would mean that they're working for 20 hours and not working for 20 hours. And then if you play your cards right at the end of the time period, then that loan would be forgiven under the PPP.
Right.
Yeah.
Right. And then they would have done 20 hours of productive work that you made profit for, and you essentially didn't have to pay for it because it was forgiven. Is that fair, Jason?
Yes, so I understand exactly. So what you're talking about is the other 20 hours that as under PPP, you can apply the PPP dollars towards there, because that 20 hours that you're under the PPP is foreseeable, that can be forgiven through the PPP program.
Mm-hmm.
So in essence, your situation, now I understand it better, is yes, it's correct.
So we have a question from Stephanie of Prosser Construction. What if you have staff on unemployment right now? Can you put them back on payroll and apply for PPP? Correct me if I'm wrong, Jason, but it's 1,000 times yes.
That is correct.
Yeah.
Just as long as you do recall, so apply for the PPP, find out how much you get applied for, and then recall them by June 30th.
Yeah.
But the number of dollars that you spend between now and June 30th on payroll is directly related to how
Right.
much of that money will be
That
turned
is
into
correct.
a grant.
Yeah.
Right.
That is correct.
Okay.
So
Can you hear me? I took myself off mute.
Yes,
yeah, go
we
for
can
it.
hear you.
Yeah, I'm in a similar boat as the other gal that just spoke, where I'm paying some staff, like, because some of our work is essential also, where I'm paying, 16 hours, 2 days a week to go do the essential work, and then unemployment for the rest, but they're not getting hardly anything. So it would be nice to be able to do that. I didn't understand the PPP, but this helped a lot.
Yeah, so and you can, if you missed the last session we did on Monday, you can go to our website or ABC's website and rewatch that whole thing where we go into more detail about PPP and
Okay, I'll do that. Yeah.
FFCRA. But the short of it is that yes, you can pay your people to sit home, and the government will reimburse you for that. Which is, it's a weird deal, but that's where we're at.
That is the deal.
I thought the world couldn't get any more weird than it is, but here we are.
This is Donna again.
Yeah.
I had one more comment. Isn't that a little unfair to get the government to reimburse you for money that you're potentially getting paid for your customers for?
No.
Yeah.
So
Okay.
it's a weird deal. And again, we are all going to have to pay for this. So this isn't money that was just made out of nothing. It goes to the national debt that we have to pay. So it'll be reflected in taxes. And if you skip out on this, then what it means is that your company and your people are going to be in a worse position than everybody else. So what this does is just we all rise together or fall together with the sea level here. So it's important that we're advocating for our businesses, and the better position that you are in at the end of this, the better you'll be able to recover and position to provide the great service to your customers that you do now.
Well, and that's really the intent of it, is to keep everybody afloat, because if we all go under, then it's not good for anyone. So yeah, you will benefit some from having done that work and getting reimbursed for it. But in the bigger picture, it's better that everyone stays afloat and that we keep all of our people in their homes, paying their bills, getting fed, all of that.
And like I had shared with you, we talked to a client this week who is positioning to create a new division of his company because he had higher payroll last year. That gives him the ability to have more cash to burn through this period of time. So he does perform essential work. so he can build his business in this period of time and materially benefit from it.
Well, and be able to do more essential work, because that's the other part of it is if your people are working, because that's really the question, right? When people are working and I'm getting paid for it, then am I not benefiting more than other people whose people are sitting at home and need this coverage? But the truth is, if you're doing essential work, we want to support you doing that and get you doing that, because people who are out there doing things like building hospitals, we need that right now.
And if you're emotionally having a hard time with profiting at this time, take all your profit and donate it. There are a lot of great ways that you can spend it to contribute to society. That's great. So we had a question, I think it was from, go ahead.
So the amount to be forgiven, so we
This
have
guy
some
first.
questions. Yeah. So I keep seeing the 8 weeks of payroll as the cost that can be transferred into a grant. I also hear June 30th mentioned a lot. So as I understand it, there are really two pieces here. And the one piece is that the amount you can borrow is equal to 2.5 times, and this is, I see an answer here that's saying the same thing, 2.5 times your average payroll, which generally speaking, we're going to take from 2019 and say whatever your average monthly payroll was in 2019, 2.5 times that, that's what you can borrow.
So that's your maximum loan amount.
And then I believe it's between now and June 30th, however much of that money that you spent. So if you spend all of that money just on payroll and nothing else, then basically that's all going to be forgiven as long as you kept your people, as long as you kept your people up to their full wages.
Yeah, above the 75%
And
under the $100,000 per person salary limit.
There's a bunch of math to it, and again, you absolutely should understand that math before you proceed with the program. But ultimately, what it means is if you spend all of it on payroll, then all of it will be forgiven.
So Terry, Jason, did we get any of that right or wrong?
No, I concur.
Okay.
Yep.
And then there was a question from Carrie,
Yeah,
also related to mortgage, interest, rent, utilities. So there are specific pieces inside of the PPP that are specifically included and forgivable.
Up to, I think it's 25% of that whole loan amount. So there's only 25% of that money can be spent on other utilities that are not payroll and still be forgiven.
For most folks, payroll is the biggest piece of the pie that is being addressed here. Yeah, good. Jason Lang asking, anyone know how the loan works? If you apply for it, do you get the whole amount, or is it a letter of credit? No, I think you get the whole amount. Is that right, Jason, to the best of your knowledge?
That is my understanding as of right now. It's basically a cash influx. So a letter of credit would basically a line of credit is not the same.
Yeah. So it would just be a check.
Just get a check.
In the same way that there are checks being issued or processed right now for individual Americans based on your 2018 tax returns or something like that.
Yeah, the $1,200.
Yep. So those are being processed and those will be sent to everybody. In the same way, that's just a cash payment. That's just money that shows up. But obviously you have to apply for this.
And ultimately, if you took it and you spent it on, say, let's say I did spend it all on my bills, my business bills, but not my payroll at all, then it's not a problem. It's just that most of that will not be forgiven. It will then be a loan that you pay back.
Yep. So Aaron, do you want to clarify what it is that you're sharing here?
Yeah, I think, from our point of view, if you take that lump sum, we'll just use a round number. Say we borrow 10,000, and at the end we only needed 9,000.
Yeah.
We would keep the extra 1,000 and just apply for the credit to the 9. So it works out. Like, it doesn't really make a difference.
Well, so then you have to pay.
Right. So he's saying, so $1,000 of it just doesn't get forgiven.
Right.
But that's okay.
But then it's a low interest. Then it's a low interest loan, or you could just pay the money back right there.
Right. That's what I'm saying. I have the money right there to pay it back.
Yep. Here you go. This is the part that I owe.
And so, the key here, though, is that the topic of this forum is cash flow. I would always rather have more cash just sitting here, not knowing what to do with it, and then you can hand that back if you don't need it.
And keeping in mind that payments on these PPP loans, if you are going to have amount you have to pay back, are deferred by 6 months. So that means you can hang on to that money and get yourself through, and then at that 6 months, that's when those payments will start kicking in.
Right. So Karen Larimore was asking if you have an employee working for 20 hours PPP the other 20 hours. So in this situation, it doesn't really matter. It's all the same.
Yeah. So when we keep talking about can we PPP things, basically, ultimately, what's going to happen is they're going to give you money. You can spend that money on whatever you need to spend it on, and then they're going to ask you for documentation. So they're going to say, what did you spend on payroll?
This is like turning in your receipts to your accountant or to your accountant, financial folks. What did you spend money on? What was reimbursable? What was expensable? This is the same thing where you get cash and then they want to see receipts for where the money went.
So if you pay them 40 hours a week, then you tell them that you spent that amount of money that you spent paying them 40 hours a week, and that amount will be forgiven on the loan.
Yeah. Jason?
So this is where your payroll record keeping comes into play. So I strongly recommend you itemize that, 20 hours of real hours worked on an assignment A, and then the 20 hours based on the PPP, basically on I don't know how you want to code it.
Non-productive.
Yeah.
Non-productive. There you go. So that will be a justification. Also, you partner with your accountant, right, in regards to making sure that your books are clean, because at the end of this, I don't know what the process is going to be like to make sure that you account for all of this. So your preparation now, as you process this, is as important as when you go down 6 months down the road when somebody comes calling, like, it's time to pay up kind of situations. That's going to happen.
Yep. And it is true that there's not a lot of information out there yet about exactly how we are going to provide this proof. Right now, there's a lot of just kind of good faith saying, we're going to ask you these questions and you will have answers. So this is a great time to track everything we can. Because if we track more detail than we need and it turns out later that we didn't need to track that, it's better to have that than to have not enough detail and not be able to substantiate.
Just like daily reports.
It's just like daily reports.
So just to clarify, Jason, what about the health insurance or retirement benefits? The expenses, are those considered as part of payroll? How does that work?
Those are considered as part of the loan forgiveness portion of this. So they should already be itemized in your books. So if they're not, would recommend start doing that if you're going to apply for the PPP loan, if you do offer any of those. So you can account for that because it goes towards your loan forgiveness.
And if you go look it up, it was actually on the PowerPoint that Jason showed us, but there's a whole list of which pieces of payroll do count toward that forgiveness portion and which do not. And that is something that you can find fairly easily and be able to see kind of what parts of payroll qualify. And it's pretty much everything.
Yep. And what is this question? Eduardo. So
what about owner draws?
So
this is basically the owner's income.
So Jason, what about an owner draw? So let's say, go ahead.
Let's think that through though. Owner draws does it go through payroll? Often doesn't. So therefore it's not considered as payroll.
So then would you make the owner an employee?
Well, they weren't an employee before February.
Exactly.
Right.
So that's a tricky one. So definitely, if you're going to do that, proceed with caution. But my understanding is, no, it's not going to be. It's not retroactive. So it's one of those things. So apologies for that one.
So this is the question that I have not heard much about. How would this work for independent contractors? What benefit do they receive? So for independent contractors, does this just work as a loan that none of it gets forgiven? Is that what that looks like, Jason? You have any thoughts?
That I'm not sure about because I don't really deal much with 1099s, but it is increasingly becoming a topic of question with my clients because my clients do hire 1099s. So I have to table that one and get back to you on that one.
And I know that 1099s can file for unemployment, which unemployment is not the PPP loan, right?
But they were very clear that independent contractors and self-employed individuals can apply for the PPP. Again, the best of my guess, and I've been looking for more information on this, but the best of my ability to parse, it looks right now like you would be able to borrow money, but because you aren't spending anything on payroll, that there would be no forgiveness portion. But again, that's just right now, that's just a guess. There's very little specific guidance for those people right now.
I think as it moves ahead, you'll find that the gig economy workers, so those that are independent contractors, are in effect their own business. They're either sole proprietors, or they may have an S corp or whatever they do for their corporate entity. They're going to be eligible, and I think it's going to be the same type of rules of forgiveness, because they're in the same boat as everybody else.
Right.
It's just that they weren't gainfully employed, quote unquote, by an employer. My daughter's a good example of that. As she's in the performing arts, she's a violinist, violist, and she gets hired all over the world to go play. And so she has her own corporation, but so now she can't go anywhere, can't make money, can't play, and so she'll be able to create and apply for a PPP.
Right, but I guess my question, the question that I've been still trying to find the answer to is, if it's generally just payroll that is forgiven and those people don't have payroll, what gets forgiven?
Yeah, but so they would show income,
Right.
obviously, because they're going to have a check coming from, the Seattle Symphony, for example, or something.
Right, so it would just be
And
their self-employment
and they can
income.
average, just like everybody else, do an average from, certain dates to certain dates.
Yep.
Yep.
Got it. And if anybody's looking for something to do with your hands or want your employees to have something to work on, we do have our training sessions that we're running. We had 2 classes yesterday. My eyes are still sore from doing that. But yeah,
It was fun though.
Yeah. So anything else? Do we have any other loose end questions that we haven't addressed? We have a question about administrative salary staff actually working.
Can you get that portion forgiven? So Jason, input from you, but I feel like they're forgiving us for what we spend on wages, regardless of whether those people are working or not. Is
whether
that
they're
true?
working and kind of regardless of position.
That is correct. Just as long as they're a W-2 employee running through payroll, which W-2 hours, and regardless of the classification within your organization, it's all under that bucket.
And I had said to company owners, if you have some scrapbooks that you want them to work on, like go ahead and ship that stuff out to them and let them just work on the pictures and what have you.
Right. So before we get to the end, I was requested from ABC that we let you guys know they have a legal action committee course on bid mistakes and bid protests with Bob Marconi from Ashbaugh Beal. And that is on Wednesday, so next week on Wednesday. And you can register through ABC Westwa. That's Wednesday at 11:15 a.m. to 1:15 p.m. You can register through ABC Westwa, or you can email Janessa to register for that.
And then what about this other announcement?
Which other? Oh, this is another webinar. Yeah, it looks like Friday. That's this Friday, tomorrow. Is that right? Is it Thursday?
It is
yes,
Thursday. Yeah.
So tomorrow, Friday, if you would zoom up so I can see it.
Here we go.
There we go. It's in the chat, but there is another, let's see, assessing your loan options under the CARES Act. And that's tomorrow at noon Eastern time, which is, help me do the math, guys. What is that here? That's 9 a.m.?
9 a.m.
9 a.m. So, and that's it's not an ABC webinar. It's hosted by Fox Rothschild LLP, but it's just a resource that ABC is making available. And I'm sure you can get more information about that on ABC's website.
Okay. So any other questions before we close out? I feel like we got through a lot of information. I know that a lot of people are just struggling with the concept that we should keep people working and pay them to stay at home not working.
But again, let's just to be clear, so the FFCRA is dealing with this whole conversation of people who aren't working. But the PPP, that is just payroll. It's paying our people. So people who are working, people who aren't working, if we're keeping our payroll up, then that's what the PPP is for. So I really want to thank all of our guests that have been here helping us. Thank you to Terry, thank you to Jason, and thank you to Andrew, even though he's not here anymore. And we really appreciate you guys coming in and giving us the benefit of all of your experience and knowledge.
So next week, we're planning on talking about safety practices for essential projects. We're going to have some safety specialists on who are going to help navigate those new waters. We're going to put up a poll for everybody if you would have some input. I think that we're starting to lose people right now.
Yep.
So if anybody for the following week would like to provide input for the next session beyond safety, we have challenges of working remotely. So we would talk about some best practices of remote work.
Time management, tools, things like that.
Evaluating the labor needs. So basically balancing our own workforce. And also, if there's another topic that you'd like to see covered that's not here, you can put it in the text chat, or you can email Janessa at ABC Westwa, and we would be happy to provide that. So if you know of anybody who would benefit from this information, feel free to share, and we put it up on YouTube, and it's on our website, and ABC's website as well. We're here to help. I feel like in a lot of ways, this is we're doing more good than we typically do at this point in time. So there we go. So challenges of working remotely. I feel like that's a pretty fair topic. There we go. Okay, so any questions, comments, thoughts before we close it out? Travis?
Do we still have Travis?
Travis, are you here? Maybe he had to go.
Yeah, looks like we lost Travis.
All right. Well, I want to thank everybody for being with us. Feel free to send me an email, or if you have any questions, just jason@arcadewayfinding.com. Good seeing everybody. Special thank you to Terry and to Jason, Jocson, and Janessa.
Yeah, always thank you to Janessa, who does a lot of the wizardry behind the scenes for us.
Really appreciate that. So we'll see you all next Thursday at this bat time.
Yeah, and we'll be talking about safety.
Take care.